Well, let's just say, I mean, going into a G20 meeting, just as we've had previously with G7s and all the other G meetings, there's always a degree of optimism that you're going to get some grand declaration at the end of the 2-day, 3-day symposium, as it were. But I think, you know, the market, possibly if it's expecting some big declaration this time, is going to be disappointed because, you know, yes, the market is hopeful that there'll be some form of resolution, but you know, I fear that probably the best we're going to get is an agreement to continue to discuss towards trying to find an agreement rather than getting capitulation, which is what it's going to take, I think, on one of the two sides. And I'd suggest we're certainly not going to get the US capitulating on the trade front. It's probably not in the China's interest to do that either. So, no, I think some disappointment probably to come if you're expecting big announcements.
It's interesting, though, Simon, because when it comes to just rolling over here, a capitulation, as you describe it, President Trump, in a Washington Post interview recently, sounding pretty confident that China would be willing to give in just because they think that President Trump will go ahead with this additional tariff threat. I mean, is that enough to really force the hand of Xi Jinping?
Well, at some point it probably will, but he's playing a game of cat and mouse to a certain extent, because while the pressure is on China, and we've seen the underperformance of Chinese stock markets during the course of this year relative to the US, so the S&P 500 versus the CSI. But at the same time, you know, Trump's got to be very cognizant of the fact that the more he imposes these tariffs and he expands that net further across the range of imports from China, the more he's putting upward pressure on domestic inflation. And that is something that he will be critical of at a time when he's been very, very open in terms of his thoughts on Fed tightening against sort of the risk of inflationary pressure in the future. So it's a little bit of give and take between the two of them. So, yes, I think, you know, pressure from China, but Trump's going to have to be careful how far he pushes and how quickly over the course of the coming months.
Simon, I'm glad you brought that up, because also in that Washington Post interview, fresh criticism coming from the president around the Fed. Fed Chair Jay Powell, of course, has a big speech coming up later today. Interesting that President Trump actually said in that interview he thinks the Fed is more of a worry for him than China. As an investor, do you agree?
Well, it's certainly a worry in terms of sort of the higher yielding part of the investment space, emerging markets, and you know, we've seen very much a bias towards sort of defensive assets in this part of the world as that rate tightening cycle has continued. I guess the real worry now is the fact that, you know, the Fed has increased 8 times since the end of 2015. Incrementally, you know, 25 basis points, almost under the radar. The US economy continues to fire on all cylinders, tight labour market, we know the story, etc. So to a certain extent, you know, that's had limited impact on dampening the underlying sort of macro picture. Could the Fed try and go by 50 if it feels that inflationary expectations are picking and gaining momentum in the early part of 19? Perhaps that would have more of a dramatic impact than these sort of gradual sort of 25s that go unnoticed. But certainly as we move into that higher rate structure, then from an investment perspective, first and foremost, investors don't have to stretch further down the quality curve out of their comfort zone in order to try and get yield into their portfolio. And that's going to impact sort of, you know, steeper credit curves and asset allocation considerations in 2019. But we're starting to see those considerations coming back now a little bit in terms of what we think the Fed will do in 2019.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.